Alright guys, a Saturday morning. Nothing else to do. I thought I would put out a video trying to give my absolute best trading advice. A dozen years of wisdom. I have wisdom in quotes for a reason, culminating into the following advice for aspiring traders. So again, wisdom is in quotes for a reason, and that's because of all the mistakes I've made. You might question my wisdom, or you would question my wisdom if you knew how many mistakes I've made. I know all the ups and downs to becoming consistently profitable in trading, because any mistake that you have ever made, I promise I've made it. I've been doing this so long, I have made every single mistake in the book, including the goofy ones where you just hit the wrong button, right? If you ever tried to go long and you accidentally shorted or vice versa, and the most embarrassing one to me is hitting the wrong button and then making money, because that tells me, one, I'm too stupid to hit the right button, and two, I'm so stupid my idea that I originally had was wrong, so I made money because I couldn't hit the right. You get the point. So every mistake you've ever made, I've done it too. Now, you know, most mistakes can be eliminated, like the ones I just talked about. It's not that hard to train yourself to not hit the wrong button. And some will always happen. You know, you'll never go every day without screwing up and doing just something silly, right? But there are mistakes that you can eliminate, and you should eliminate, and incredibly change your trading forever. So, and here's a couple that you can literally eliminate right away. All right, one of them, and this is, you got some caps there with exclamation points for a reason. Averaging down. Just if you're, I'm talking about day trading here. I'm not talking about swing trading or building positions. I'm talking about day trading. And there are traders that can successfully do this, but I am really talking to anyone who has struggled or is struggling trading or is thinking about becoming a trader. Some people have been trading 10 years and are still struggling, so I'm talking to you too. But you'll have a better trading career and more profits if you just simply don't average down. There's a guy out there that runs a site, and I'd never give any names or anything, but he literally teaches, I think he runs his own chat room and everything, he teaches people to keep buying as something keeps falling, and I can't help but watch that and think how many trading careers never got started because they started with that guy. That guy probably does it effectively. The other day I saw he had literally, by the time he was done averaging down in something that kept falling, and the lower it got, the bigger he got with each consecutive buy. I think he had over $200,000 in the stock, and now he's got, I don't know how many brand new traders in his room. How many of them do you think were able to follow that kind of trading? So, and then it bounced a little bit, and he finally got back to break even and killed it. Said, okay, I'm out, and literally yelled at some of the other people for losing money on it. So, number one, if I give you any advice, if you want to become a trader, don't average down. It is a recipe for disaster. And the scary thing about it is averaging down, I shouldn't say this, it's almost irresponsible to say this, but it's why it's so dangerous. Averaging down will work a high percentage of the time, okay? You can just, okay, something keeps falling, so you buy more, you buy bigger, and eventually you get some kind of bounce and at least get out, break even, or maybe make a few bucks. It's the worst thing that can happen to you if you're a new trader. Because once you make a few bucks after doing that, you've just taught yourself that it's okay. And then there'll be that one time, and it only takes one time, to where you're in double margin. Every dime you have, including margin, is in a stock, and it just keeps falling. Boom, your career's over. Your account's dead. Just like that. So there's a reason why I'm so adamant about that. And then the other thing you can do to immediately improve your trading is unfollow the Twitter gunslingers. Now, a lot of you are probably reading that, and you already know what I'm talking about. Some of you might have no clue. There's people on Twitter, and I'm not talking about people that you think or never verify anything and you know they're just full of it. There's millions of those, but I'm talking about the actual traders that are posting, oh, you know, you'll see a post like, okay day, I only made 17,000, or yeah, pretty good day, I made 120,000. And they'll post, they'll literally give screenshots of their profit and loss from their broker. So I believe them. I contend that those guys are killing new traders, much like the average down guy. A new trader comes in and sees these Twitter posts, and immediately they think, oh, I want to be a trader. I want the Lamborghinis that this guy has on his Twitter feed or whatever. I want to make you know, I want $17,000 in gains to be a bad day for me. Well, if you're, and these guys will call like someone making a couple hundred I can't talk, a couple $100 a day, they'll call them pikers and take shots at them. And that's just silly, guys. If you want to trade for a living, just like weightlifting, you don't throw 345s on a side and start bench pressing. You'll kill yourself, right? Same thing. You've got to start small, and you can't make $17,000 in a day if you can't make $170 in a day. Okay, so just like weightlifting, your goal should be to be green every day. I don't care if you made $10 today. You can slowly build up your size once you've proven to yourself that you can make money on a regular basis. So reading all that on Twitter, even though you see the verified profits or whatever, it's extremely harmful, because you join these guys' websites and you try to keep up with them, and it won't take long till you're out of the game, just like the people that follow this guy that's averaging down and teaching you to go bigger every time something keeps falling. All right? There's two things you can do right there to turn your trading around. I'm speaking to the people that are struggling. All right? Now, what took my trading from choppy to consistent? First, I guess most important, I'm going to show you three things. I'm going to show you three things, but I want to make one more comment about mistakes. I talked about averaging down and following the guys on Twitter. There's another comment I want to make to talk about, I don't know, how as a trader, I don't know, I run a chat room, and I see people all the time still making mistakes. And I just wanted to be clear, a mistake, the two I just alluded to, right? Averaging down, following someone on Twitter that gives you that casino mentality, right? Those can be eliminated. But a mistake, just to clarify, in trading, a mistake should be something that you broke your own rules. And those two things I just mentioned should be cemented in your rules, okay? Breaking your rules is a mistake. If you take a trade, you followed your rules, and you lose money, okay, that's not a mistake. Not everything works, so just to understand that. All right, anyway, all right, back to where I am. Okay, I'm sorry, I'm trying to read an email here at the same time. Okay, so I did have one more comment about averaging down, and a lot of people don't understand this, and I've never heard anybody say this. But if you have ever blown up an account, or if you've ever given back 60 days worth of profits in 15 minutes, then you will know what I'm talking about. Literally, a split second can ruin your trading career. Have you ever said to yourself, after doing something really stupid, have you ever said to yourself, I can't believe I did that again? I promised myself I would never do that again, right? And maybe you were out of trading for a year because you had to build your account back up. And then, 2 weeks back into it, you did everything that you told yourself you wouldn't. And that moment happens, or that snowball starts in a split second. Meaning, you said to yourself in just a split second, okay, I don't care. I'm going to blow off the stop. Or, I don't care. I'm going to buy more. I know I shouldn't, but I know this one's going to turn around. In that split second that you blow off your rules and you click that mouse, that can start the snowball and ruin it. So you have to be so disciplined, and you have to have been through enough pain, like I have, that you'll never let that split second occur again. Or maybe you'll waver and you'll do what you shouldn't have, but then the very next second you'll kill the trade because you say to yourself, whoa, I just did what I said I would never do, and I know what that can lead to. And that's, if you do that, if you do that and you immediately click it again and get out of the trade and say, wow, I just saved myself, a huge mistake. That's a very important hurdle right there. So just remember, maintain discipline the entire time you're at your computer. Okay, a split second where you make that decision you shouldn't sometimes, and then the trade gets away from you, and then you feel like you've got no recourse but to wait. It all goes back to that split second where you wavered, right? Trading done right, by the way, should be comfortable and enjoyable. So I'm kind of back to the Twitter guys again. It shouldn't be adrenaline pumping casino type action, okay? And that's what a lot of these guys make it out to be. And again, they're not purposely destroying trading careers, but they're doing it just by their posts and posting all that money that they're making. And again, I'm not saying they're doing it with malice. Some of them are doing it because they're trying to sell their service, and shame on those guys. But some of them are just out there to brag, and they have the screenshots to prove it. That's fine, but I still contend they're ruining a lot of people that never really get a chance to trade because they want to get those kind of gains. Their first month trading. Okay, so anyway, enough babbling. What took my trading from choppy to consistent? Here's the top 3 things. First, you have to focus on the right stocks. And I have volume and passion in parentheses there because I will only trade stuff that has either recent volume and passion, meaning recently, like a day or two ago, had massive relative volume for that stock. Then I might trade it the second, third, or fourth day. So that's really important. I always want to be trading something with recent or current volume and passion. Current meaning it might have just had great news this morning, and then we look for the entries that we know how to take. All right, that's really important. A lot of daily charts that look great but have no kind of recent volume or passion. So I think maybe 2570 is a great breakout point on this chart. But if you look at the volume, it's just been steady for 6 months, and there's really been no, great news. In the past, I would have thought, okay, it's getting to that breakout point, I'm going in. But a lot of times you'll see those move up 15, 20 cents and just right back down because there's no volume and passion behind it, all right? 2, favorite setups only or stay in cash. This took me years to figure out. And again, for a long time, occupational hazard, I run a chat room. We average 250 to 280 members in there every day trading with us, okay? So for years I felt like, well, I should always be calling something. And a few years ago I figured out, no, I shouldn't. You're doing a disservice if you're trying to force trades, right? So now, and there's people in there trade all day. They trade during lunch. They do their own. A lot of people are just doing their own thing, and that's fine. But I figured out the people that are going to follow me, I'm not going to call something that doesn't fall into that category of one of my favorite setups, right? So I probably average 4 or 5 trades a day. And that doesn't count scaling out, okay? A lot of people think, well, you run a chat room. I've been doing it since 2004, by the way. So people think he must call all kinds of trades. I don't, but I can trade any time of day. I'm not just log in the first 15 minutes and play a gap play, and then Mike's done for the day. Because, and I'll talk about it in a minute, but some of our favorite setups can occur at any time. But I am extremely comfortable sitting in cash where a lot of traders are not, okay? They always feel like they have to be in something. That's a huge mistake. You don't. Would you rather be nickel and diming yourself to death, and then when finally a good setup comes along, now you've got to take it and hope it really works so you can make up for the, for trading the stuff that didn't have the volume and passion, and maybe you're down a few hundred on the day or whatever. Wouldn't you rather be flat on the day when one of your favorite setups comes along, right? And speaking of my favorite setups, here's the 3. Gap plays, which occur generally in the first 5 or 10 minutes, got tons of volume and passion. Breakouts, and that could be something that ripped 2 days ago on 10 times its average daily volume. So that still falls in the breakout category for me. 2 or 3 days later, maybe it's pulled in, and then I get a great setup, and you get that secondary move. Those are great things to have on your watch list and on a chart somewhere on one of your monitors. And then 3 reversal plays, and that's the one that I just alluded to, that can come at any time of the day. So I can be sitting there even during lunch the other day. I don't have charts up right now, but Teva gave a beautiful reversal play. Normally I wouldn't be trading during lunch, but it's set up perfectly. Yeah, I probably should have had the chart up. But anyway, reversal plays, by their very nature, do have volume and passion. If they don't, then you're stalking the wrong reversal play. All right, and then number 3 was position size. This is another big blunder, and this goes back to the Twitter folks, right? If you want to try to make $17,000 on one of these guys' bad days, you can't do that unless you're trading really, really big, all right? So I always tell people, wherever the trigger is to buy a position, look at where the stop is, where it was called, or where you deem a proper stop. I always give a trigger and stop when I make a call. And then you decide how many shares to buy, expecting your stop to get hit. I don't mean that to be, I said don't enter a trade with a negative mentality or in that light, I'm not trying to say be a pessimist, but be a realist. Every trade can fail. So you enter with the position size expecting the stop to get hit. That will keep your position size in check. If you only think about how high this thing can run, then you're going to trade really, really big because you're only thinking, with that casino mentality. Your best traders worry about how much they're going to lose on any trade before they worry about how much they're going to make. And people say to me, well, Mike, if I keep my position size that small, how am I ever going to make a killing on any one trade? And I reply, you shouldn't make a killing on any one trade. If you do, guess what? You're trading too big. And even if you make a bunch of money, you've just taught yourself you can go as big as you want, and then one of these days you're going to get burned big, and you'll realize. So, if you can learn from what I'm telling you rather than make the mistakes yourself, you'd certainly be ahead of the game. And there's my email address if you want to refute anything I've said, not that I'm looking for debates, or if you have any questions on anything I've said. Thanks a lot, guys.